Hi everyone, Veronica here with Greenlight Capital Canada, and welcome to the August 2026 market update. We're halfway through August, and Canada's housing market continues to send mixed signals. While the market remains softer than it was during the strongest periods of the housing boom, we're seeing some encouraging signs in consumer confidence and economic activity. But what does all of this actually mean for your clients? Let's look at 5 key trends shaping the market and the opportunities they may create for mortgage professionals. First, Canadians still expect home prices to rise over the next year. Optimism is strongest in Saskatchewan and Quebec, while buyers in British Columbia are expecting prices to remain relatively flat. The important takeaway for mortgage professionals is that Canada is not one single housing market. Local employment, population growth, housing supply, and affordability can create very different conditions from one province or city to another. For your clients, their local market and financial situation may matter much more than the national headlines. So, what does this mean for your clients? For buyers, a softer market may create opportunities for those who are financially ready to purchase. For homeowners, existing equity could continue to be an important financial resource. And for investors, local housing conditions can make a big difference when evaluating a property. The key is to look at the individual client and their goals, not just the national market. Second, Canada's immigration reset may not immediately reduce housing demand. Permanent resident targets are falling, but one-time initiatives are expected to keep admissions elevated in the near term. That means the impact on housing demand may not be as immediate as the headline numbers suggest. Population growth continues to influence housing demand, particularly in communities where rental and ownership supply is already limited. For your clients, population trends can create different opportunities and challenges. Homebuyers may continue to face competition in markets experiencing strong population growth. Real estate investors should pay attention to local rental demand and new housing supply. And property owners may want to consider how population trends could affect long-term demand for their properties. Third, consumer confidence remains low, but there is some encouraging news. In July, consumer confidence recorded its strongest monthly rebound in more than 3 years. It's too early to call this a major turnaround, but improving sentiment could be an early sign that Canadians are becoming more comfortable with the economic outlook. And that matters when people are making major financial decisions. When confidence improves, clients who previously put their plans on hold may start looking at their options again. That could mean buying a home, refinancing, renovating, accessing home equity, investing in real estate, or securing financing for a business. The opportunity for mortgage professionals is to start those conversations early. Your client may not be ready to move today, but understanding their options can help them prepare for tomorrow. Fourth, Canada's housing supply is changing. Rental construction continues to surge, while single-family construction is moving in the opposite direction. More rental construction could eventually increase rental supply, but fewer single-family homes being built could mean tighter ownership supply over time, particularly in markets where demand for detached and ground-oriented homes remains strong. For your clients, this trend can mean different things. Homebuyers should consider not just today's inventory, but how ownership supply could change over time. Investors need to look at how increasing rental construction could affect their local market. And homeowners may want to consider how limited future ownership supply could influence long-term demand. The bottom line? Today's construction trends could shape your clients' options years from now. Finally, what recession? After a weak start to 2026, early indicators are pointing toward a potentially strong rebound in Canadian economic growth during the second quarter. If that strength holds, some of the recession concerns that dominated earlier this year may have been premature. That doesn't mean Canada's economic challenges have disappeared, but stronger economic growth could provide more stability for households and businesses heading into the second half of the year. A stronger economy and improving confidence could encourage some clients to revisit plans they previously put on hold. That could mean purchasing a property, refinancing existing debt, accessing equity, investing in real estate, or securing capital to grow a business. For mortgage professionals, this is a good time to reconnect with clients and find out what their plans look like for the rest of 2026. The biggest takeaway from the August market is simple. There isn't one story that fits every client. Home prices, immigration, housing supply, consumer confidence, and economic growth are all moving at different speeds. That means understanding the individual client behind the application is more important than ever. Don't just ask, what rate are you looking for? Ask, what are you trying to accomplish? Thank you for watching Greenlight Capital's Market Update. If you have questions or you're exploring private lending and funding options, visit us at greenlightcapitalcanada.com. We're here to help you navigate the market with clarity and confidence. And before you go, scan the QR code on screen to join the waitlist for our new lead generation program, coming soon. It's quick, easy, and 100% free to join. We'll see you in the next update.